Well, good morning, everyone.
Good morning.
This is definitely one of the biggest misconceptions in the home buying process that choosing a lender is no big deal. You can just choose whoever. If they've got a good rate, that's totally fine. But there's a lot more to consider here.
Yep. So choosing a lender is just so much more than the rate that you can get. And we're here to tell you about what that is.
Yeah, I mean, obviously the rate matters long term. We're here to protect your financial investment, and that's going to mean thousands of dollars along the lifetime of your mortgage. But it means absolutely nothing if you can't get a house short term. And a lender plays a big role in actually securing and getting someone to accept the offer on the house. So we want to make this process as smooth as possible for y'all while protecting your hard earned money. And today's episode is going to do just that.
And remember, while we're talking about rates as well, not to compare your rate to your sister or your friend or your neighbor. Rates are not the same person to person because there's just a lot of different factors that I don't know, that factor in
Absolutely.
that factor in into what your specific rate is. So you can't compare your rate to somebody else. They're determined by your individual financial picture.
Absolutely. Your credit score, your debt to income ratio, what kind of mortgage you want, if it's 15 years, 30 years, if it's a jumbo loan, conventional loan, government loan. There are a lot of variables there that a lender will help navigate you through. So don't be intimidated. They're there to help. But it is a very important decision in terms of who you choose as a lender.
So let's talk about who you choose as a lender and how does this affect your offer on purchasing a home?
So you need to be pre-approved. You've heard us beat that drum before you go looking at homes. So you should be having that conversation with a lender all the way at the beginning before you even go out to look at houses, okay? Once you are under contract, everything moves super, super fast. So the more legwork you do up front before you go look at houses, the more paperwork you submit to the lender, all of that, the easier your contract period is going to be.
When it comes to actually making offers on your home in the current scenario that we're in Dallas Fort Worth and likely a lot of other markets is it's extremely competitive, okay?
Yes.
So a seller is able to choose from many different offers on their home. They're going to look closely not at only the purchase price, but they're not going to just take the highest offer if they don't know that that highest offer can close. Actually, I had a scenario yesterday
Mm.
where we were not the absolute highest offer, but the one that was higher than us wasn't strong in terms of who their lender was. And the seller didn't have confidence, the seller's agent, that it could actually get done. And so we were highly considered even though our offer was lower. So the seller needs to know that they're actually able to get that dollar amount, meaning it's actually going to close. They can't put it all out on the line for a transaction that they don't think is going to close. So it matters that the lender has a solid reputation of doing enough legwork up front that the people that they're bringing are vetted and qualified. If they say this person can purchase a home, we've got to be able to trust their word on that. And some lenders are better than others at qualifying on the front end.
That's really well said. You may think, okay, a lender, their job is to make loans. Don't they have every incentive to close on time? You would think yes. But just like any company that I'm sure many of you have been a part of, there are some kinks in the wheel and you can't always control every single part of that. And so being able to close on time and make sure that they've really exactly what Brianna said, vetted you appropriately is a key part of that. I've had people exactly the same way push back on who the lender was and that they've had a bad experience with them closing on time. And so they didn't want to take our offer, even though it was the highest. And so you want to make sure that that's not the scenario that you're in, that your random lender is the reason that you wouldn't get your dream house.
Mm-hmm.
You're going to need someone on that subject. A lot of that comes down to customer service and someone being competent at their job. So you need someone that's going to be responsive, especially on nights and weekends. That ends up being the time that we're most likely to place offers, and we're going to need them to write us an approval letter specifically for you, specifically for that house. And you're just going to need someone who's going to be able to pick up your call, who's going to answer your questions quickly and effectively in a way that you understand.
Mhm.
This is key, especially as a first-time buyer. You want to make sure that the financial piece of this, while we as realtors are going to help you with some of that, the lender is going to be in the nitty-gritty of your specific financial situation. We're just going to manage kind of what you want to spend. And so they need to be on the ball in making sure that you understand everything that's expected of you to get that mortgage.
Mhm. And the reality is not all lenders are going to be the right fit for you, and that's okay. Very similar to our episode about choosing the right realtor. If it doesn't feel like the right fit, that's totally okay.
Yeah.
You know, there are plenty of realtors out there. There's plenty of lenders out there. You've got to have trust and confidence in this person and know that they're going to get the job done right for you. And so we want it to be a good fit for you. Your realtor and your lender are essentially coworkers, is what we
Mhm.
consider it, on this transaction. Your realtor and lender work together to get the deal done, connecting you to the connections that you need to be made to be able to get you to the end goal of getting you in your home. And so it just needs to be the right fit. And it's okay if it's not. Say something and find another, try another.
Yeah, there's a lot of communication between us and the lender that you don't see behind the scenes, making sure that they have all their ducks in the row. Because truly, the majority of the contract period is the amount of time that your lender needs to get your mortgage created, to get you underwritten and approved and get everything across the finish line. So much rides on them having that all together.
So let's circle back a bit to rates because this is something that people really like to hone in on. So we'll talk about it because it is important. It's important for
Absolutely.
the long run. We don't want you to way overpay just because you like one lender more than the other. Okay. So rates are important. So let's talk about rate shopping. What would it look like to compare rates?
So, rate shopping, for those of you that are very first time, don't know much about this, is when you're going to go look around and compare interest rates across various lenders. And so, generally, we would say the rates should all be in the general same ballpark. You might be looking at small variations. If there's a large variation, that's definitely something to take a look at and something to be skeptical of. It may be too good to be true, or it might be great, and you really need to take advantage of it. But the one thing and a big mistake that we see people make is that they talk to several different lenders, but they quote unquote shop their rate on different days. Here's what you need to understand: markets change daily, and therefore the rates change daily, especially being in a pandemic. We've had a lot of volatile situations. This happens frequently where, worldwide events or market events end up changing the interest rate. And so you want to make sure that you're comparing apples to apples, that if you're talking to lenders and you're specifically shopping the rate, that you're getting a rate quote from them all on the very, very same day.
Mm-hmm.
Keep in mind that in most instances, you're not going to be able to lock in your rate until you get under contract on a home. So the rate that you get quoted that day is unlikely to be the rate that you actually end up paying. However, it will give you a good indication of how their rates compare to others. Keep in mind, though, expect some fluctuation in rate, but keep in mind that we are still at historic lows overall. So really look big picture. Mortgage rates for the last, 3 years have been unbelievably low and are likely to stay that way generally for the next couple of years.
Mm-hmm. And beyond checking rates, mortgage, lender to lender, there's other fees that you can check lender to lender too. So you can ask a lender for a fee sheet, right, to understand what are some of the standard fees that they charge because they might vary slightly from lender to lender. That's something that we refer to often as closing costs. So that's one example of another thing you could ask to compare.
Yes. There's two interest rates, quote unquote, that are going to come on the sheets that the lenders provide to you, the quotes. That one of them is going to be the base interest rate, and another is going to be something known as APR. And so that's the broader measure of the cost of the mortgage. It includes your interest rate, but it also includes all the other costs that we just mentioned. So broker fees, discount points, closing costs, and that's going to be expressed as a percentage of your loan. So that's a very easy way, instead of looking, okay, is this one specifically charging me an underwriting fee that's less than the other? It's an easy way to compare percentage to percentage what people are charging just to take out the mortgage itself.
Okay, so let's talk about how this affects my credit score, Keely. So I'm rate shopping and I'm talking to 3 different lenders in one day, and they're checking my credit score.
Mm.
Isn't that going to give a negative impact on my credit score if they're flagging it 3 times in one day?
That's scary, isn't it? And we definitely, I know people should be, we'll put it this way, you should be particular about your credit if you're looking to go buy a house. The good news is the credit bureau knows that you're likely to rate shop. And so you actually have a 45-day window from the first time one of the lenders pulls your credit to shop multiple lenders. So the credit bureau basically gives you a grace period, that 45-day period, where any mortgage lender that pulls your credit, that's only going to count as one inquiry to your credit. Now, if you go open a new credit card, that's going to be its own inquiry. This is specific to shopping your mortgage rate.
Mhm.
Obviously, after you do this shopping and you kind of get a general sense of your interest rate, please don't go buy a car on lease or anything else larger. That will change your qualifications for a mortgage, and that will change the approval that's given by a lender. So you want to be very aware of your financial picture, very cautious when you're ready to buy a house, and make sure that you're being conservative in your financial decisions as you pursue that.
Okay, so another myth.
Ready?
Big banks are obviously the best place and our best bet to go for a mortgage.
Gosh, I thought this.
Oh,
And I
you
actually
did.
used a big bank my first time that I bought a house, which is so funny. This is pre being a realtor. And I think this was the probably one of the most shocking parts about being in the industry now myself. Here's the deal. Big banks can be great. They are notoriously slow and infamous for not closing on time in the real estate world. And so the majority of the pushback that we get on offers is because you're using the B of A, the Chase, the Wells Fargo of the world, and they've had a bad experience with them closing late. They're only open 9 to 5, Monday through Friday. There's not a lot of nimbleness there that we need when it comes to actually closing a house. So there are certain instances where it can make sense, but just because maybe they're offering you a certain credit or a better rate that you wouldn't get anywhere else. I can understand that,
Yeah.
but you need to understand that it's going to come with some pain. And especially in today's market, it may mean losing the house of
Mhm.
your dreams.
Right. Right. Because which brings us full circle back to the beginning of it actually getting you in a house because of that reputation and the not being super nimble is exactly why a seller might look at it and compare to the other offers that they have on the table and decide that it might not be worth the extra risk that they're going to take on. So that is exactly why it's probably just not worth it.
Absolutely.
Unless you're an employee and you get some super fabulous deal.
Yeah, there's a lot to weigh here, and I hope
Yeah.
that's what you hear us saying is this is a well-rounded choice that you need to make, and it's ideal to interview a couple people, see what's going to be the right fit. We highly recommend shopping. I think that's a great idea, and then you're going to have confidence that who you choose is the best for your specific
Mhm.
situation. There's also a couple other things. There's some specific programs that specific lenders will do. There's state programs that certain lenders are certified for. Some people can do different things with jumbo loans because they're going to hold it at their actual institution. So there's definitely some differentiating factors if your situation is super unique. But everything we've kind of talked to here today is going to apply to the
Mhm.
masses.
Okay, so I now know how to choose a lender. When do I need to choose a lender?
Ideally, you need to know by the time you're putting in an offer.
Mhm.
You absolutely need to understand what you're pre approved for before you ever even go out and look at houses. The biggest question, and I think the best green light in terms of a lender is that they're not just looking for the amount of house that they could possibly qualify you for.
Mhm.
They're asking you, what is your monthly payment? What is your household budget? What can you afford to buy in a house? Because it's not just what you could possibly qualify for. It's what you actually want to pay every
Mhm.
single month. And so you need to know that pre approval number. There are a lot of different people who will give you the same ballpark number that we could kind of hit the ground running with. But by the time you're putting in an offer, you need to know. It's not as though it couldn't change within a couple days of getting your offer accepted, but it's going to make your life a lot more difficult because there are a lot of things that need to happen quickly as soon as we get under
Yep.
contract.
Yep. Well, we hope this helps you understand how to shop for your lender and choose the one that will be best for you. A good way to start that search is to ask for recommendations. Feel free to reach out to us for some names of local lenders that we trust.
For more mortgage and lender related information, go back and listen to episode 7, Am I Ready to Buy a House? And episode 20, The Hidden Costs of Buying a Home. It's our honor to support you as you make the largest financial decision of your life.